So I have Jeff with me today, and glad to be back in town, Jeff, where I can find you at normal times. Thank you, as always, for coming
Yeah.
on.
Yeah. Great to be with you, Randy.
Well, the
Lots
wild
going
week.
on.
Well, there's a lot going on, and I think the most pressing issue has nothing. Well, it has a lot to do with Tesla, after all. But let's talk about Nvidia for a minute. They beat on revenue. They beat on profits. They raised their dividend. They are doing a 10-for-1 stock split. The stock is now over $1,000 in the after hours, and they gave better guidance than Wall Street expected. The only
Yeah.
negative anybody on Wall Street is talking about is that their increases are decelerating, and that there's some question about whether they can sustain this over multiple quarters, continue to have these kind of gains. So your thoughts in general about Nvidia today?
Yeah. I mean, the 400% growth, I think, on the data center side. Their net income is growing significantly. I found it interesting. They're doing great. And I believe in what they're doing, and I think they're doing an amazing job. I don't think it's going to slow down over the next year. Leading into this earnings call, every hyperscaler had their own earnings call, and they almost all of them to a T said they're raising their capital guidance for this year, and they're raising it for next year. And next year's guidance is going to be, much bigger than the 2024 capital spend. And we're not even, and those are the first tier of customers. There's a whole second, third tier. There's sovereign AI. There's all these, things behind this. And Nvidia can only work with so many people, I think, at one point. It's one thing to ship them chips. It's another thing to, you actually have to partner with them with your software platform to get a product into production. So yeah, I don't think this is slowing down anytime soon. It's not financial advice, but they're backlogged still. You got to watch the lead times, and by the way, like I've actually done business in a prior life with Nvidia when they were venturing into the smartphone side and wanted to compete with Qualcomm. And I found them to be highly professional, highly competent team, and great to work with. But the thing though, in my experience and from doing silicon, uh, you know management, procurement, and just supply chain is to watch the lead times. So what they said in the call today is like, look, we're on the new platform where there's more demand than supply. That's pretty common on everything new that you're starting. If you're making a desirable platform that everybody wants, in general, people are going to line up for it, and there'll be more, there'll be more suits, excuse me, there'll be more, more demand than supply. And let's see how long that lasts. Let's see what the lead times are when Blackwell starts shipping, and let's see where they're at by the end of the year. And they're also doing tremendous scaling on the back end with TSMC. And so they're bringing up a lot of capacity. So there's a lot of moving parts. You have to be a very smart investor to understand, like, okay, our lead time's going down because capacity is going way up. And, you've got to really understand what's happening in the supply chain. You can't just read one-dimensional signals and fly off the handle. People saw that SMCI, which is this network server assembler integrator, they didn't pre-announce their earnings this quarter, and it set Nvidia lower because this downstream supplier didn't pre-announce a massive beat. So you have to be careful with these one-dimensional reads. But I think they're a company for the ages. They're one of the most innovative companies, and their net income and their revenue growth is just off the charts.
Yeah, now they said in their earnings call that we supported Tesla's expansion of their A1 training cluster to 35,000 H100 GPUs. That I think was known. Maybe not known. Their use of NVIDIA AI infrastructure paved the ways for breakthrough performance of FSD version 12, their latest autonomous driving software based on vision.
Yeah, that's a great call out, Randy. That is NVIDIA. This is my read on it. That is NVIDIA saying Tesla is about to do something rather significant in the full self-driving space. And we want to let you know that that's NVIDIA powered, at least on the training side. They don't mention that Tesla makes all of their own inference
Right.
on the vehicle side. And when they talked about their auto segment, they talked about awards with BYD and with the new Xiaomi car and so forth. But it's not clear. Okay, so maybe they're putting a chip inside of their car, but what's happening on the training side? How many miles do they have? What's their performance look like? What's their path to getting into production with a self-driving solution? None of that's very clear. And so I think that nod to Tesla was, hey, we think Tesla, Elon's an exceptional person, exceptional leader. Tesla's an exceptional company. They're going to do something very big very soon. And we want to let everybody know that, this is empowered. This is powered by Nvidia.
Yeah, I think that's a good call on your side. So a lot of little notes, folks, in the last hour or so on X talking about moving money from Tesla into Nvidia. I started talking about this a month ago or maybe 6 weeks ago, that I thought that there would be people trimming, maybe some people completely getting out of Tesla, but some people trimming their Tesla holdings in this environment in order to take advantage of another amazing company. And that many of these individuals might be those who made money on Apple, made money on Amazon, then made money on Tesla, and now this might be holding down some of the potential for Tesla to move quickly up.
Yeah, there's certainly a battle for dollars in the marketplace. But there's also a lot of money on the sidelines. But yeah, you have to look at what's Nvidia's for. They keep outstripping their guidance, and what happens is they get cheaper after earnings calls. And yeah, you can say that the beat and raise of guidance is smaller than the raise of guidance before, but you're getting into the law of large numbers. What's fact is Nvidia has gotten cheaper after the last several earnings calls. And so if you have $1,000 or $10,000, whatever denomination of money, and you say, well, you have Nvidia trading at this, you have Tesla trading at this, and then you have to look at your time horizon and say, like, what do you think Tesla is going to do over the next year? What do you think Nvidia is going to do over the next year? And people have to make decisions. I think that risk reward changes at various points in time. But I think that's how people actually, think. And I think people in the Tesla community just need to realize that people want to make bets on things that, they're going to look at things like the profit earnings. They're going to look at the future. And this is where, this is where it becomes a little bit debatable in terms of earnings growth. But it's not clear, by the way, like, when are these new products coming out from Tesla? When does the robotaxi revenue hit? How does the FSD revenue ramp? So there's things out there, and they're super exciting. And there's many reasons to be, invested, not investment advice, but there's many reasons to, depending on your time horizon. But yeah, I don't know if it's a 1-for-1, but Nvidia's essentially tripled in the last year, and Tesla's flat.
Yes, there's no doubt about that part. We know that one for sure. So, all right, you bring up in two different examples here. You brought up FSD and, of course, RoboTaxi or RoboCab or whatever we're going to be calling it. How do you see the roll up to the 8th? How do you see the 8th? How do you see what happens after the 8th? Do you have kind of your own version of what you think is going to happen during this period?
Yeah, we're 70 some days from this event, so it's getting really close. So if we're inside a Tesla, I would have to imagine that the leadership and the key people working on this whole program, they've got a version of the ride-hailing app on their phone. And that thing is probably being updated every single day, where they're trying out new things and adding features and improving the bugs. So they've got the phone app, they've got that running. They've got the set of like latest training. Probably it's going to align with August. Maybe now they have that. Maybe they're going to update it more over the next couple of months. But there's a version of software on the network infrastructure side that has the latest training information. That's being uprepped. And then you got this version of software for the car on the inference side. So you've got these, I'm dumbing it down, but there's like three things floating around that when you glue them together, the phone app, what the car software, and on the network infrastructure side, I would have to imagine that within 70 days, that they have a version of this thing working to some level of performance, to some amount of bugs, and there's probably features that they still want to add. So between now and then, if I'm them, I've got a daily schedule of like, what do I need to do on the phone app side? What do I need to do on the car side? What do I need to do on the training side? And it looks like, between 12.3 and 12.4, if we're going to get this 5 to 10x improvement, the key thing to hear is what do they think 12.5 is going to do? Because I'm sure they have 12.5 now doing internal testing, and they may have 12.6. And if that's another 5 to 10x, now you're talking 25 to 100. Now, we don't know. None of us on the outside of Tesla know what the interventions are per mile. But when you start getting into 100x or 1000x improvement, it's going to get really good really quick. I think that's the takeaway. So it's exciting. I think this whole time is exciting. We have a shareholder vote, in between these 2 points in time. I think that's actually less exciting. I think what's really exciting is what they're building towards on 8.8. I don't think a service is going to start on 8.9, but I think they're going to show you a glimpse of the very near future, and where it could start with current Teslas today, and then over time, maybe they show you a hardware prototype of the robotaxi. And I think this vehicle is going to be extremely innovative on the materials, on the industrial design, and Tesla is going to show you why you need a purpose-built robotaxi, and they're going to think through things all the way, like its robustness, its ruggedness, its ability to be cleaned, and so forth. They're going to think through a lot of these variables and comfort and the whole experience. And I think that's the product Franz says he's really excited about after Cybertruck. And I think we're going to hear more about that on 8.8.
So Nicholas Gibbs on my program last night said he thinks that there's already could be robotaxis in Austin driving around right now. Given what you just said, could you imagine a scenario where Tesla employees are actually ride-hailing other Tesla employees who are in cars? In other words, a full-on dress rehearsal out there.
Yes.
Okay. That could be happening. Because as I was thinking about what Nicholas said, I was hard pressed to see how they would get into actual ride hailing with consumers without that becoming exposed. I mean, how would you keep that a secret?
Well, I mean, you can keep it a secret in terms of it being internal Tesla software and Tesla employees, but yeah, make no mistake that they're prototyping this and they're testing it. So that wouldn't surprise me at all.
So I'm going to switch gears for a second here and talk about the stock movement of the last couple of days. I know you're not really big on the day-to-day moves, but these were pretty significant moves in a completely flat market. What do you think happened over the last 2 days?
Well, I mean, to be honest, I mean, as Tesla investors, the market is at all-time highs. And you're right. Recently, it's kind of recovered from the April, drawdown, but the market itself is now at all-time highs, and Tesla's, probably 40% of its all-time high, 40 or 45% of its all-time high. So what I'm take is, there's going to be some outsized moves here or there. There's some news, but it's not clear that any of that news, what it moves the stock on a daily basis. But I mean, I think there's going to be an overhang until there's more clarity on Elon's situation with Tesla. I think there's enough concern that's been created both in the retail base and just this fever you see from Tesla to make sure everybody knows, like, this is American, like, they're advertising for the vote, and they're doing a lot of work to make sure that this vote goes through. So that may be concerning, or that may be alleviating some people. I don't know. I don't think there's going to be fireworks going off on June 13th or June 14th. I think investors should prepare for a range of outcomes and understand the probability of those outcomes, and then make any decisions based on, like, their own personal situation, their portfolio. I can't tell you what to do. Randy can't tell you what to do. But I would prepare for a range of options. But I think but again, I would preface that with, I think there's high probabilities on some options and very low probabilities on others, but you have to be prepared. And that's what people need to do. So I think to answer your question, that overhang is going to keep the stock range bound. The other thing is analysts don't know, like they were caught off guard in Q1. They missed numbers. A whole conga line of analysts took their numbers down and, one after another. And it's really not clear what's happening in quarter two. Tesla said quarter two is going to be better than quarter one. And, but, it's not clear to them. So if it's not clear to them, and we're kind of getting mixed data, Europe, China was okay. The numbers on Monday. I think the US numbers are going to be good with this 0.99% financing. So the people that rate the stock they haven't really set forth a new direction in Q2, nor are they, providing any real direction for 8.8, outside of maybe Adam Jonas. So that's why you're going to see the thing, I think, be range bound until Tesla comes out. Maybe there's a Q2 print that says, hey, we think we've bottomed on gross margin. If it's north of like 19-20%, that's going to be a big statement. If the number is a much bigger shipment number in Q2 than people think, that's going to be a statement. So I think that's going to need to happen, and then a really good showing on 8.8. And I think between those two events, if they go really well, I think the stock will go really well. If they're kind of average or underwhelming, then I think it could be under pressure.
So while I was on vacation, I really didn't have a chance to pay much attention to the entire voting issue. I mean, I read, what Tesla Booba Mommer had to say and some of the other things, but I didn't get to listen to you guys talk about it on the Bulls. Where do you think it is right now? Is this are we looking at a fairly good chance that Elon's package wins? Some people are saying, but the move to Texas probably doesn't, which I don't personally care that much about. The package for Elon would be the big one. Where are you on it? How do you see it playing out?
Yeah, I mean, I think 73% of shareholders voted for the package in 2018. The company is 10x since then. And I would be surprised if more than 50% of shareholders as of April 15th that participated in this would vote against his prior compensation package being approved. I think the bigger thing with that, so Texas, though, is different. Texas is, that vote has Elon and Kimball removed, and it has to be a percentage of all available shareholders, not just the ones who vote, which makes that one, basically, if you don't vote, you're causing problems for Tesla and what they want to do with going to Texas. So I think that makes the move to Texas vote become challenging. I think the chairwoman called it like Mount Everest, trying to get this one through. I would hope the board have kind of trial these things through the big institutions and kind of understand where they sit before they put these things to a vote. But I think there's a range of options. I think it's more likely that his prior compensation package is approved. I think what's also more important is what's the future compensation package look like? And all the more reasons if you could get out of Delaware and get maybe into a better situation. Because if you're stuck in Delaware, then you've got to move first off, you've got to get that judge to approve his prior compensation package, now looking at the new voting data. And you would have to get them to approve, maybe not approve, but they could be in the middle of a new compensation package. So Delaware is obviously left a bad taste in you can have an activist judge basically overrule the desires of millions of shareholders and the company itself, because of what they perceive is a problem. And so if they can get themselves into a situation that it makes that less likely, that's all the more better. So I think that's why Texas may be more important than Elon's compensation vote.
For that,
because look, if his vote fails for his comp, I think the board is immediately working on the next compensation package, which would include making sure that he's made whole from the prior compensation package.
So in listening to Brad Priestley Tuesday morning, there were two takeaways that I had. I think that most folks, I don't think, caught up with. One was he said that Tesla has shifted their focus to new products. Did you catch that part near the end? I thought that was interesting, that maybe this was part of why Semi is, in play now, is maybe the Tesla just didn't have the bandwidth for new products over the last 2 years. What did you think?
Yeah, no, I think this period of time over the next 12 months is going to be the greatest and most concentrated introduction of new products, hardware and software and services. Those three things, I think you will see a rate and a level of like impact on the industry that's like nothing we've ever seen before. Obviously, the Cybertruck will be the leading EV truck probably in a quarter or two, all combined. And the Model 3 refresh, and then you're going to have these new intermediate vehicles be introduced over the next year. You're going to have new energy products, but on the vehicle side, the Semi, ramping. So you're gonna have another new category. So they're expanding in the new categories, and that's a big deal, especially because those categories are pretty large. And Tesla has a big cost and performance lead on others that are trying to participate in those categories. So I just think that's just the hardware side. Then of course, we have FSD and Robotaxi on the software and services side. They're continuing to update the user interface, make it really, honestly, the best user interface in any vehicle. So I think this is going to be the most dense period of new product introductions that Tesla's ever had before. And remember, they've done some major OpEx trimming this quarter, both on the OpEx side and the factory labor side. So they're going to be a lot more fit and trim on the gross margin and OpEx side on the other side of this than they were going into it.
Yeah. The other thing he said, which I've been waiting all week to ask you about, he also said that he made this big plea to the fleet owners and operators out there and said, look, quit messing around buying 3s and 10s and testing for a year or two. We need you to step up to the line and buy. I speculated when I heard that, as somebody who's dealt with truckers pretty much my entire life. You've had much more dealings with bigger trucking companies, that this might have been the real reason why they put the project on hold, that maybe everybody was nickel and diming them with regard to orders, saying, okay, we'll take 3 and we'll test them for a couple of years and then we'll come back to you. Even the ones who put the orders in, like Pepsi, et cetera, might have said, yeah, but we'll buy 1,000, but you know what? We need to test 100 first. What do you think about that speculation?
Well, I mean, to be fair to the partners of Tesla, we need to understand like what their feedback has been on performance and capability of the semi truck. We all believe that Tesla's building the best EV semi truck available, but I'm sure there's a list of issues that they've got to get through. And it's not uncommon for it to take a couple of years when you're delivering a new category of technology to a company. So I think there could have been issues on both sides. And I also think these companies may have been trying to scratch the itch on, ESG and so forth. But I think as the data starts showing that economically, like this is a better solution for you, regardless of ESG, like your outbound and inbound logistics will be cheaper as a result of using Tesla semis. When it gets to that point, the other thing is you need the charging infrastructure to support something like this too. You can't just throw these semis out there and expect them to be pulling up to Tesla superchargers. So you need the truck, mega chargers out there. You need that going. And then Tesla needs a factory. So I think all these things needed to kind of come together to launch this. It can't just be like we have a design of a great truck. I went to the semi reveal, by the way, in December of 2022. And it was honestly a handover of a couple of vehicles, but the factory's not there, the charging infrastructure is not there, and I'm sure there's a set of bugs that the team had to work through. I think the performance of the product has probably improved immensely, and then the charging infrastructure has been ramping. So I think those are the things that need to happen for semi to get the scale. And when it gets to scale, it's a new category, printing tons of money for Tesla.
All right, last question, because I know you have a time problem. Markets got slammed after the Fed minutes showed that there was more caution than expected on inflation. They were a couple of members on the group were willing to do hikes. There was much less interest in how many reductions that are going to take place this year. I said after Powell's interview last month that I didn't think they were dovish at all. I thought that there was, in fact, I've been saying now for 2 months, I don't think there's going to be any reductions this year. And if so, not before November, December. So I don't, what do you say?
Well, I think they need 2 or 3 cooler inflation readings where it moves meaningfully lower. And or they need a meaningful crack above 4.1% on the unemployment side. If either of those happen or both of them happen, I think they're going to cut. I think they could cut as early as July. But I agree with you that the probability of that has declined. And while I'm not at 0 for this year, I think any one of those things could happen. I think you could get another cooler CPI. And I think depending on how cool it is, it'll be interesting to see. And then the prior PPI was revised to disinflationary. Like it was literally, it went from being kind of hot to like, oh, this thing was actually negative.
Right.
So, I mean, let's see what the core PCE comes out at. The housing stuff's been sticky, but it looks like the starts this morning were missed. So, I think, this long and variable lag is happening. And I don't think the Fed wants to be in a situation where they have to cut because something broke.
Yeah.
I don't think they want that. I think they want to cut. They have the first cut in, and then, maybe there's a crack in employment or another meaningful move down in inflation. But I do think they're going to need to see a couple of cooler CPI prints or something crack on the employment side.
So I know that they say that they're politically neutral and that they don't want to, et cetera, but can you imagine them doing a cut in September and having to take the heat for that?
I could see them doing it. Powell is, it's a Democrat administration currently. Powell, I think, is a registered Republican. I think they could, I think they could figure out how to do it. I don't think they want to be doing anything around the election. That's why I think July is interesting. And I think the Fed really wants to cut. I don't think they wanted rates to be this high for this long, because it could create a whole kinds of problems. By the way, like our interest on our debt, I mean, it jumped from 9 to I think to 16% of GDP, or sorry, it could jump to 16%. And the higher this number goes, I mean, this starts becoming like catastrophic for our country. So this interest on the debt thing is an important thing to watch. You don't hear them talk about it, but it's a big issue. Like we're creating a crisis here in terms of, and why are we running, $7 trillion? We're in a wartime. Like, why are we running that big of a deficit over these last couple of years? So I just, there's a lot of things in play. Make no mistake that, the amount of spending we're doing is driving inflation.
Yes.
Clearly. And there was spending in the prior administration to dig us out of COVID, and there's a lot of spending still happening now. You can be money more than quarterback, but I think that issue has to be in the back of their minds too. Besides employment, besides inflation, like what's this interest on the debt, and where could this thing go as a percent of GDP?
Right. Jeff, I thank you. I want to let you go on time, and I will just continue with the program here and wrap up the where we are in the markets right now. But again, as always, thank you for coming on and helping me to understand. I don't know whether you're helping anybody else, but just helping me is something.
Thanks. Thank you, Randy. Great to
Thank
be
you.
back with you, and have a good rest of your show and rest of your day. Thank you.
Appreciate it. Okay, bye for now.
Bye-bye.
Okay, so what else do I have on the list here? There's a couple of things we didn't get to. We have the yeah, let's see here. Sorry, I'm just having to look around to make sure I'm going to cover everything. Uh, uh, yeah. Well, okay, most everything was covered actually. So great. One of the questions I have, maybe you can put into the comments below what you think about this. I think that Optimus needs a voice. And I say that my Model Y needs a voice. Right now. I want the voice now. When do you think? I wanted to ask Jeff, we'll ask him next week. When do you think Tesla's embodied AI products will start talking to us? Will that be before August 8th? Will it be on August 8th? Will it be after? I think it's time. We need to hear that. And by the way, will they use Scarlett Johansson's voice? Anyway, let's take a look where the markets are now. And let's start with with Tesla in the after hours real quick. We've got Tesla in the after hours down 66 cents. So not quite reaching down to the low of the day. So a total of about $7 down after the 11 plus dollars up yesterday. So, over 2 days, a $4 gain. That isn't anything to be sneezed at. Let's see about the rest of the market. We have the Dow down 201 for the day, the NASDAQ down 31 for the day, S&P down 14, and the Magnificent Seven was mixed, as were the Cathie Woods. Yeah, they're pretty mixed, mostly in the green for the Cathie Woods. It's been a little unusual in terms of what has been happening with bonds. But let's go ahead and take a look at those bonds. We have got we only have, of course, the one bond at this point. We don't have all of the bonds yet because that happens in 25 minutes. But we do have the 10-year down 0.8 of a basis point in the pre-market, sitting at 4.426. So that's still a good number. It's been in a very tight range now for over a week. What we be looking for is if we're going to see some real softness in the bond interest rates, we'd be looking for the 10-year to go back down in that 4.25 range. Of course, a lot of us were speculating that by August we were going to see 3.25. That is completely off the table now. It would take a lot of inflationary deceleration, a lot, to get us down to that 3.25 that I was expecting would happen by August. Okay, then let's take a look at the rest here. We have got the oil sitting it down another 41 cents in the pre-market at 77.16. Brent unchanged. We've got natural gas down actually 1.83. Now, I finally did do some searching around. I didn't do a deep dive, but my initial dive was I couldn't find anybody talking about it. The biggest thing that I could find was that there's a lot of shipping of natural gas offshore. So there's a lot of export of natural gas. So apparently there's a ton of customers out there willing to buy it at these prices in other lands, probably primarily like Great Britain, and I'm not sure where else. But if we're shipping a lot of that offshore, that's good for the U.S. But it's going to raise your home heating bill, or in some cases, other of your gas needs. But anyway, sitting still at $2.79. Just real quick, let me take the time right this minute to give you a comparison. We were in April, in early May. Let me look at what that date was. Just to give you an inclination here, an idea, 426. We were sitting at 161. Earlier in February, we were at $1.70. Okay, and now we're at 278. So that is a mess. That's close to a 50%. Well, it would be a 50 $1.70, it'd be more than a 50% increase in a very short term, very, very short term. So I think that's worth talking about. And yet, believe me, there are it's not significant headlines to be found. Maybe you've got something. Let me know in the comments below. We have got gold coming down another $10 to 23.82. So now well below that 2,400 break point, and down about $60 in just a couple of days. We have got copper also down a little bit, down well off of the $5.12 it was. So profit taking seems to be a theme here. Profit taking on natural gas, profit taking on gold, profit taking on silver, profit taking on copper. A lot of profit taking over the last few days. We have got the dollar up a little bit, but not a lot of change there. And you've got Bitcoin down 378, sitting at 69,000 again. More profit taking. Okay, so there's a theme here. What about in the markets, in the equity markets? Okay, we've got the Dow down 66. That was down 200 already, now down another 66 in the pre-market. The S&P down 9, and up 9. NASDAQ future up 67.50. That would be down 17% for the Dow, up 6.16 for S&P, and up 0.36 for the NASDAQ. All right, and as mentioned, Nvidia, let's go back just for fun and look at Nvidia, what it's doing now in the aftermarket, after hours here. Nvidia in the after hours, 57.59 up. That would be about a little over, right around 6% up. And that puts it at 1,007. I think it has been a little higher than that. I might have mentioned it, might have seen it just a tad higher, but that does seem to be where it's settling out at this point. And then Tesla still sitting at down 54 cents in the after hours. Okay, I think that covers what we're going to cover for today. Please make sure. Okay, a lot of you missed it. I'm going to put the card right here. Earlier today, I put up part 2 of the Brian Wang discussion that I had with regard to the semi-truck. Part 2 was easily as interesting and as strong as part 1, but the numbers were like 10,000 yesterday and a couple of thousand today. So I'm not sure whether you just missed it, you weren't paying attention. Maybe my thumbnail just wasn't strong enough. I'm not sure, but I would highly recommend you go back and check that one out. And then please like, subscribe, notify. Of course, tomorrow, what am I going to do about tomorrow? Scott Walter might be I did an interview with Scott Walter today. I know normally Thursdays is Cern Basher. I don't know. I'll have to figure that out tomorrow. We'll see. But over the next few days, you're going to have Scott and Cern and more Brian White, because I've still got one of Brian White's sitting in the can ready to go too. All right, that's all I got. It's been great talking to you. Please join Patreon. That would be wonderful. And see you next time.